Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Hey, Reluctant Preppers, if you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a returning guest today, Rob Kirby, proprietary markets analyst on both the precious metals and financial markets and political affairs, is here with us again on Reluctant Preppers. Rob, thanks for joining us.
Pleasure to be with you again, Dunnigan.
We've got so much to talk about tonight. I don't know where to start. We've got globalist dreams evaporating in France.
We should start at the beginning, because that's usually the best place to start.
Man, I don't know. There's a lot of threads here that go a ways back. If you have a beginning in mind, we were in the pre-interview. We were talking about developments in the EU, specifically in France, causing a lot of concern for globalists following the Brexit and what's next. We talked about Deutchebank looking extremely shaky, as has been the case for some time, but increasingly so. We talked about the G20 summit and some of the sort of flash optimism that is now fizzling coming out of that, the huge drop in the Dow today for one. We talked about the bond yield curve flattening and inverting and what that means about the future of the markets. So we've got, if you know where the beginning of all that is, I'd be just delighted for you to lead us back and we can start from the roots and work our way back.
Well, I mean, let's start with the G20.
Right.
Specifically, let's start with the way Trump exited the G20. I didn't see him give a middle finger to anybody on stage, but his reluctance to be any part of a photo op with the rest of the globalist world leaders spoke volumes to me.
Okay.
And to me, that's the embodiment of continuing and growing American isolation away from the globalist entity. Let's put it that way.
Would America's isolation, how do you count Britain in or out of that?
We're not sure yet. With Britain, Theresa May seems to have her challenges in front of her because the Brightons have not bought into her sellout of Britain to the European Union. So where this whole Brexit issue stands right now is a bit of a dog's breakfast, or maybe a lot of a dog's breakfast. And I don't see that being remedied anytime soon, which is going to lead to more and growing confusion. And this is not going to be good for markets globally, period.
And in contrast, what you see happening in France and why you feel that that's roiling a lot of concern for globalists.
What's going on in France can be summarized, I guess the elevator version of it for me. We have what's occurring, they're referring to it as a yellow vest uprising, which is protesters wearing, or big numbers of protesters wearing yellow vests and rallying against the tax policies of Macron in France, who has hiked taxes dramatically on the price of gasoline and diesel fuel for the commoners. I see it as inflation. I see it as one of the manifestations of the printing of money in the European Union. And I also see it as the need for the French government to raise taxes dramatically on something as heavily consumed as petroleum, gas, diesel, for the commoners is showing that the German government's finances are being stretched. And this also leads us back to the discussion about money printing and the inflationary pressures that have been created from all of the fiat money creation. And we're seeing other countries further devolve into hyperinflationary episodes. And isn't it funny, as a gold bug and as a person who is a strong advocate of the teachings and the revelations of the Gold Antitrust Action Committee for many, many years, it was always been GATA's pretense that this money printing and this manipulation of markets ultimately would lead to the further debasement of currencies and would lead to inflation. And it's amazing how the globalist entity has tried to hide inflationary developments from us by doctoring data. But, lo and behold, like 10 years ago, nobody would talk about countries experiencing dramatic inflation other than pointing to, call it Weimar Germany or the Zimbabwe hyperinflation.
Right.
Now we have countries all over the world hyperinflating. Now it's happening in South American countries, Venezuela, Argentina, Brazil. It's happening in the Middle East. It's happening in full bloom in Iran, and now I think we're starting to see the thin edge of the wedge of it in France. And I mean, how long are these shills from Wall Street who claim that basically there's been no interference or manipulation on the part of officialdom in our capital markets? How are they going to explain when every country in the world is experiencing the dramatic effects of inflation, as surely they will as night follows day?
And since you're contrasting history to present moment, I should have mentioned that today is Tuesday, December 4th, 2018. Right, so these inflationary pressures and the meddling or denial of that meddling in the capital markets often, like Gregory Mannarino and others, talked to us about focusing our attention not on the stock market indices, but on the manipulation of the interest rates and the bond rates in the bond market. Can you talk to us about what the heck happened today in the inversion of the interest rate curve, why that's important, what it has historically signified, what it may signify this time?
Sure. Well, we've spoken about this in the past, Dunnigan. An inversion in the yield curve where short-term rates, historically, typically we would say if the 2-year bond rate is yielding higher than the 10-year bond rate, that's called an inversion in the yield curve, because typically, normally in healthy economic times, the yield curve slopes upward to the right. So an inversion of the yield curve typically means that we have very, very tough economic times coming in the very near future. But let's do speak in terms of the reality of the current so-called yield curve inversion. It's not a true 2 to 10 year inversion. The inversion being cited today as a big part of the problem in the equity markets is indeed an inversion 2 year to 5 year, but it's not a full-blown 2 to 10 year inversion as yet. I look at all this jibber jabber we've heard about the yield curve inversion as people, the shills from the mainstream, trying to put an explanation on much of what's going on in our capital markets that defies explanation unless you're looking at the world through a pair of glasses that includes market rigging and interference from officialdom. So that's the way I see it, and that's the way I summarize it as I see it right now anyway.
Are you saying that you don't believe that, it sounds like you do believe that there's an indication of short-term concerns about the market that are being reflected in the yield curve in the short term, but you think we need to wait until we see a flattening or a more inversion at the longer end of the yield curve before we would have convinced that there's really serious things ahead?
I think there are serious things ahead, but I don't believe you can look at one issue in isolation, namely a 2 to 5 year slight yield curve inversion that we witnessed today. Instead, I think you need to look at things more of a totalitarian respect. I'm thinking in terms of what's going on in France is I view the disruption and the social unrest occurring in France. Metaphorically, it's like the wildfires we saw in California. They could spread very, very quickly. These are issues that are not going away in a hurry, and these are issues that are not being contained in the short term. I would say the risk of these yellow vest uprisings run the risk of spreading to Italy, run the risk of spreading to Britain. And we know already in France that the immediate effects, because this yellow vest uprising has been occurring now for a number of weeks, if not months. We know that tourism has dropped dramatically in France because foreigners don't want to go visit France when there's the social unrest that's occurring. This is impacting retail sales in France because people don't want to go shopping when there's demonstrations occurring on main streets in France, and it's disrupting supply chain in terms of retailers that are open are having the flow of goods interrupted. So this all leads to or speaks to the notion that we will likely see a reduction of in GDP going forward, with the risks of this spreading. These are very ominous developments, and I don't see them being rectified anytime soon. And then I mirror what's going on. We saw this sort of big reduction in yields, like the 10-year bond, and in the last 2 weeks has gone from roughly 310 down to 291, where it rests today in yield. We've seen we haven't really seen a rally or a significant rally in the precious metals prices as yet. But one thing we have seen in the precious metals arena, particularly in Comex futures, open interest of Comex futures in both gold and silver have had a dramatic reduction in the last two and a half weeks. And this to me is a tell, because I happen to be quite aware that an absolutely astounding amount of physical metal has been taken off the market in terms of its moved from weak hands into very strong hands in the very recent past. And to me, this is very likely the reason why we've seen such a dramatic decrease in open interest on the paper game being played on the Comex. Physical metal is becoming harder and harder to acquire in good size, let's just say in large institutional size. And as this physical or the remaining physical that there is in the world, as it becomes harder and harder to procure, it makes the continuation of the paper shenanigans that go on the Comex, which is affectionately known as the Crimex, because it is an operational crime scene operated at the behest of the globalist entity. And these guys are keeping a lid and have been keeping a lid on the paper price of metal. But when physical metal, which is required to maintain the myth and the lie that is perpetrated in the paper markets, when the physical metal ceases to be available to support the lie, the paper shenanigans will blow up. And we could be seeing developments that might portend a blow up in the paper markets. Could be. So I'm somewhat encouraged by that, because I happen to maintain a belief that reality wins in the end.
What, besides the reduction in open interest on the Comex, you said there's other indicators that might indicate a shortage of physical metal? What else might you be looking for?
Well, I mean, I have mentioned to you, and the nature of what I get exposed to is much of it is off-market transactions, and I'm just very aware that large amounts, silly amounts of physical precious metal have gone from, let's just say, places where it was visible to places where it will never be seen again. And this is occurring on an ongoing basis, and this is showing no signs of letting up. And that may sound a little bit cryptic, but I can assure you it is occurring. And I can tell you also, there are some very, very well-known names in the metals industry who really shouldn't believe as much as their own crap as they do, who say that there has been very little demand for physical metal. All I can do is assure you that they are clowns to be making such statements, because the demand for physical metal is insatiable, and it's growing, and it continues to grow. And basically, when metal becomes available, there are more dollars chasing it than there is physical metal available, period.
Yeah, maybe also just a disingenuous statement on their part as a distraction. Can we go back to the EU for a minute? Because Deutchebank has been in the news again and again. Every time we hear about a stress test or a rating or risk and that kind of thing, it's just no good news seems to come out about the health of Deutchebank. Can you talk to us about why that's important to us over in the U.S. and everywhere else, and what you think the real situation is about Deutchebank?
Well, my take on the Deutchebank situation is that Deutsche Bank continues to be in the crosshairs of German bank regulators who have been absolutely upset that Deutsche Bank has been involved in the derivatives markets to the extent that they have, because the derivatives that Deutsche Bank has been involved in largely is dealing with the U.S. Treasury complex, specifically the Exchange Stabilization Fund. And this dates back a number of years ago, where German regulators became very, very upset when they realized the extent to which Deutsche Bank was involved in the interest rate derivative machinery, which was perpetrated on humanity by the Exchange Stabilization Fund at the behest of U.S. financial elites who panicked when we had a credit crisis back in the 2007 through 9 time period, when they forced interest rates to zero. The forcing of interest rates to zero was accomplished by using many, many tens, if not hundreds of trillions of dollars worth of interest rate derivatives with key players, where the Exchange Stabilization Fund instructed the Federal Reserve, the New York Fed trading desk specifically, to engage in interest rate swaps with commercial banks, Deutsche Bank being one of the biggest of them, being a foreign bank. And when German regulators got hold of that information and confirmed that that was the case, German regulators didn't think it was proper that a German bank was being used to affect U.S. monetary policy. And this is what in turn led to the Germans asking first for an audit of their gold being held in trust at the Federal Reserve, where they were rebuked, which then led to the Germans asking for some of their gold back, which to what degree that did occur, I don't really know and cannot confirm one way or the other. But I can tell you that the Germans still have some gold supposedly held in trust for them by the New York Fed. And I'll tell you what, if I was the owner of gold and it was being held at the New York Fed, I don't think I'd really feel very comfortable that I really owned the gold. So there. So, and this has been an ongoing thing, and this has led to friction between the U.S. and a lot of friction between the U.S. and Germany. And I'm just going to say that the historic relationship, at least post Second World War relationship between America and Germany, is very strained. America has done things like impose sanctions on Russia that haven't been to the liking of Germany, because German economy and German industrial concerns have a great deal of interaction and intertwinement in Russia. And something we've spoken about in the past, back in 2015, when the Environmental Protection Agency in America levied warnings and then huge fines on Volkswagen about their diesel emissions, skirting of diesel emissions regulations. Volkswagen was only charged formally by the EPA in the U.S. It was literally days after Volkswagen had opened a very major engine plant in Russia. And if people can't see the relationship between America wanting Russia curtailed and pinned down economically, and then a major German industrial concern opening an engine plant in Russia, and then days later being charged by the Environmental Protection Agency for emissions from their engines. I mean, like, do you really need to have your nose rubbed in it before you understand how the quid pro quo works on that front? So, and I would suggest that American-German relations continue to be strained, and if anything, the tension between the two countries has grown worse. So, and we can reference that by talking about stress tests being put on Deutchebank. But you know what? At the end of the day, I truly don't believe Deutschebank's going to be allowed to fail. And I know that there are people talking about there being risk of it. And the reason I don't think Deutschebank's going to be allowed to fail is because we don't have free markets. And if we did have free markets, Deutsche Bank would have failed a long time. And if we really had free markets, Morgan Stanley would have failed back in 2008 when they were insolvent. But Morgan Stanley was recapitalized using interest rate derivatives that were done with Morgan Stanley in that time frame with the Exchange Stabilization Fund. And the evidence for this is dramatic and conclusive if anybody wants to look at the evidence, because the evidence is all available in the quarterly derivatives reports posted by the Office of the Comptroller of the Currency. And it's all there for historical posterity's sake. And anybody who wants to, or anybody who actually understands derivatives, can go and review historically what happened. And so if Morgan Stanley couldn't fail when they were insolvent, I don't think Deutsche Bank will be allowed to fail, even though they maybe rightfully should. So, because that's the world we live in right now.
What would be the realistic consequence to international finances and the U.S. should Deutsche Bank fail?
Dominoes. Dominoes. The whole system comes down like dominoes. And that's why it won't be allowed to fail. Because they fall like dominoes. So, and then we probably have something akin to anarchy, and nobody benefits from anarchy.
What I'm trying to form is a question about how you maintain the facade of stability and trust in the banking system when we have things like the U.S. or whoever having to go bail out a foreign bank, it just seems it reminds me of
the U.S. isn't bailing out Deutchebank.
Not yet, maybe you say.
The ECB will bail out Deutchebank.
I see.
Because the ECB is controlled by Germany. I mean, the euro is Germany. So this is reality. But I would say for the time being anyway, America has big problems and big issues and isn't very happy with German actions. And I'm sure they're particularly upset with German regulators raiding Deutsche Bank's offices, because I think it puts the fear in them that German regulators might just spill the beans and implicate American financial impropriety in the management of the world's reserve currency, because that's what the real story is. You see, the stewards of the world's reserve currency, the U.S. dollar, have done an extremely poor, and I would even suggest criminal job. And, you know, let's just say the body of people that are aware that this is indeed the case is growing. And this is what's at the root of international financial tensions between America and the rest of the world. And anybody who thinks I'm sitting here blaming this on Donald Trump is absolutely out of their mind. Donald Trump has had nothing to do with this. Donald Trump has been dealt the worst hand of cards anybody's been dealt in their life. And I mean, I've said it before and I'll say it again. Donald Trump has been thrown into the wheelhouse of the Titanic. And he's been told to manage the ship. And he's doing the best he can. And he's very, very, very skilled and experienced operator. And how do I know that? Because the ship should have sunk already. And it's still floating. And you ask me why this or how this can continue to go on. I'm going to say to you, the last time I checked, David Copperfield still has good audiences coming out to see him make Learjets disappear. Do you really think Learjets disappear? Nope. But people still pay good money to go see the show. And that's what's going on right now in our global financial universe. People are still paying good money to see the show. And when that's going to stop is a good question. Because it should have stopped a long time ago. And it hasn't. And it's, you know, I'm not trying to make a light of this. If it wasn't so serious, I would cry.
Yeah.
I mean, I don't know what to say to you other than this is what's going on. This is reality. A lot of people don't want to hear about it. People on Wall Street won't talk about it, because if they do, they lose their job. They lose their job. They lose their country club memberships. They lose the private schools, and they lose their mistresses. And this is what really is going on in the world. But you know what? I'm just the messenger. So shoot me. But this is what's going on, and it's sad.
The reason I brought up the bailout of foreign banks was I was trying to recall back in, I believe it was the 2008 collapse, when we were told domestically here in the U.S. that, we're going to have to use, I think it was $400 billion they originally said to bail out the banking system. Then later on it slipped to $800 billion. And then later on we found out there was like some $16 trillion that happened on the backside or something to European or national or international banks. And that's what I'm getting at, is that we're being told out of one side of the mouth that we should have, that this is all, knowing that this is a confidence game, we should have confidence in our banking system and confidence in the U.S. dollar. But on the other hand, by the way, to prevent this huge domino effect, we have to go intervene and bail out international banks. It seems like that should put the lie to it.
Here's what it really comes down to. Yeah, we're told all kinds of things that aren't true. We're told that inflation is at 2% or under, But if you listen to John Williams' extremely credible work, he tells us that it's 10 or higher. And if you listen to the government talk about the unemployment rate,
yep.
they tell us that the unemployment rate is under 4%. But if you talk to John Williams, who measures unemployment the way it was measured in 1980, it's over 20%. I mean, and that means when you're using fallacious inflation numbers, that means your measurements of GDP are false implicitly, which instead of having positive growth means that the economy has had negative growth now for a number of years. And the only reason it appears bigger is because it's growing in terms of debased dollars. Mm-hmm. So, excuse me. And that's just like saying that the price of gold today is $1,235, but in 1971 it was $35, and therefore look at how much the price of gold's gone up. Well, you know what? If you want to read a piece that was published in the last day or two by a really, really fine man who has got his head screwed on right, who really understands all this. His name is Hugo Salinas Price, and he wrote an essay. It was called the Story of the Gold Coin, and he talks about how he bought a gold Mexican peso coin back in 1972, and what that Mexican peso coin is worth today in pesos. And I mean, it's the story is astounding, and it really brings into view what's happened to paper money. And an ounce of gold buys, in terms of commodities, an ounce of gold buys more or less today what it did sort of 30 years ago or 40 years ago or 50 years ago. But in terms of fiat currency units in Mexico, like, the price is off the Richter scale. And I mean, we still, as yet anyway, haven't experienced the true hyperinflationary effect, not here in North America. And that's because the very nature of the debilitating effects of money printing are a lot like the effects. It's a disease, and it's a lot like the effects that are brought onto the body by diabetes. Diabetes does not ruin your heart. First off, what it does is the limbs, the periphery of the body is where the blood gets taken from first to protect the heart. Which means you lose circulation in your toes, you lose circulation in your fingers, and if it's not dealt with or corrected, then it can bring on more serious consequences like heart failure and you name it. But the whole thing with the debasement of the currency, it doesn't affect America first. It affects the far-flung regions of the world that have adopted the dollar, that bought into this whole dollar as the world's reserve currency routine, and they are the ones who feel it first. And that is indeed what we are witnessing happening around the world right now. And as other economies become increasingly more affected with the debilitating effects of the American money printing, the effects will turn and will come home. And and I think anybody who's maybe lost somebody close to them to the ravaging effects of diabetes would understand exactly what I'm talking about. And all I can say is I don't relish the day when America is palliative financially, because those days are coming. Sadly, they're coming. And you know what? The people that don't want to hear it, well, good luck when you're in bed and you can't move and you lose your legs or you lose your limbs. Mm-hmm. Good luck to you all.
Well, that's why we're here doing what we're doing tonight, you and I, is trying to get the word out to those who'll hear it. And I wanted to circle back with one thing you mentioned earlier in passing about, we were talking about the EU, you mentioned Russia in the Germany connection. We also had Russia in the news regarding the G20, quotes from Putin talking about de-dollarization, and I know that Mike Maloney was just quoted as quoting Putin and talking about this as being a significant statement about that the West, specifically leaders of the U.S., shooting themselves not in the foot but a little higher, he said, about causing the de-dollarization because of their policies that are causing other countries to have to do transactions outside of the dollar system and so on. And it's not that they're turning away from the dollar, but the dollar's turning away from them.
Donegan, the reason countries are de-dollarizing is because the amount and the excessiveness of the fraud in the dollar system, and we haven't talked about this yet. Like, all we need to do is talk about the 21 trillion in dark money that has been created. That has been it doesn't appear on the books anywhere. I would argue that it's been siloed in the Exchange Stabilization Fund, and I would argue that the 21 trillion that's been identified by Dr. Mark Skidmore and Catherine Austin Fitts, that money is being used for the interference in our capital markets by the criminals who are in control of the U.S. dollar hegemony system. And this is the cache of money, the unreported money that's being used to manipulate our capital markets. This is the money that's being used to suppress the paper price of gold. This is the money that's being used to buy and memory hole U.S. government debt when foreigners are abandoning the U.S. Bond market. This is the money that's being used to goose the stock market whenever they want people to get a sugar fix, to feel the wealth effect from a rising stock market. This dark money is being used to basically to create unicorns. And our capital markets today are dominated by unicorns. Unicorns. And the farts that come along with them. So, I mean, our capital markets are an abortion and an embarrassment to humanity. They're a disgrace. And they are an active crime scene. And you know what? And Trump knows it. But Trump, if Trump comes out and admits it, everything breaks down, right, and we have anarchy. And there again, most people will argue, who benefits from anarchy? Mm-hmm. Good question.
In the face of that kind of unreal manipulation of capital markets, and you mentioned something earlier, the manipulation of the dollar through inflationary practices. We had a discussion with another guest recently where we talked about the double cut that takes, because first of all, just the straight out dilution effect of overprinting money, or I won't say money, currency, immediately has a dilutive effect on workers' wages and on savings, and puts pressure on pension plans, that sort of thing. But there's this for homeowners. That's the American dream, is to be a homeowner. And when you talked about the peso story, what you called it, the story of the gold.
The story of the gold coin.
The story of the gold coin.
Price.
Reminded me of the automatic inflationary effect on, for example, housing prices in that environment, which then makes artificial gains that are taxable. And if people could just put themselves in that mindset for a minute, imagine that overnight the money supply was double or 10 times or whatever, and now suddenly the government says, oh, looks like your dwelling is now worth 2 or 10 times as much as what it was. Therefore, you owe us tax on all that gain. And some people would say, hey, no, nothing happened. Well,
you know what, Donegan? I think the issue is much more grave than that.
Go ahead.
Because when you are the owner and operator and custodian of the world's reserve currency, and when you've got the whole world dollarized, and when you've got people all around the world selling the fruits of their labor and the natural resources that come from their country, and you're selling it all for US dollars. And then you find out that the people that are minding the shop, the US dollar shop, who tell you that the money supply in the world is X, and you really find out that it's 10 times X, it has a way of making you not want to deal in dollars anymore. And it has a way of making you not trust the Americans as a viable or honest counterparty in trade. And it makes people refute the dollar. And is that not what we have been witnessing over the past 4 or 5 years?
Yeah, it's funny
Have
because
we not been witnessing this in spades?
yeah, people first said, "Oh, it'll never happen," and then, "Oh well, that's not significant."
And has it not been heightening?
Yes, and more frequent episodes and more large scale and high profile examples.
Exactly. And this is a trend that unfortunately is not going to be reversed. Very unfortunately, because they're going to burn this puppy to the ground. And that's why it's so important for people to be taking part in what you promote and stand for. It's called prepping. And that's why it's important to have financial insurance in the form of physical precious metal. It's why people would be advised to have some storable food on hand, because the supply chain interruptions, which are just starting to bud in France, are very likely to grow dramatically over the coming days, weeks, and months. And so having some financial insurance, some food insurance, and maybe a means to protect it all might make a little bit of sense, and might make increasingly more sense as we move along the timeline, because this picture is not getting prettier.
That leads me to my last question I was saving for the end, and that is, today we had an over 800-point drop in the Dow Jones, which we keep being told don't look at the at the stock market index because it's just the last tail being wagged by the dog. But anyway, your sentiment over the last 2 interviews that we've had with you has been strikingly bearish, and just based on everything you've said tonight, the tenor of what you're saying sounds like it's still in line with that sentiment, that you do not see bright days ahead, but darker days for the financial markets.
I have a funny feeling, Dunnigan, that in the coming months we might be talking about the days like today. We might be saying, remember the day when the Dow was only down 800 points.
With that, Rob, we want to give people a chance to find out more following your work. They've certainly had a series of interviews here. Guys, we have a playlist for Rob Kirby on our ReluctantPreppers.com channel. Don't fail to take advantage of that. But Rob, if they want to find out more of your work, where can they find you? You
can catch me on the web at kirbyanalytics.com.
And for those of you who'd like to support our work here at Reluctant Preppers, please go to patreon.com/reluctantpreppers and see if you can join our supporting active patrons at least $1 a month or up. Can help support us. You'll be in the drawing for a 1-ounce U.S. Silver Eagle giveaway each and every month as a thank you gift to our active patrons. Rob, any final thoughts for our viewers before we let you go?
Even though it's been a tough road for people in the precious metals arena, if you're a holder of physical metal, continue to hold it. And if you have the means, I would recommend and suggest that adding to your position might be a good thing. All that being said, never bet your grocery money on anything. And too much of a good thing might not be too good for you. So in moderation, but own insurance, financial, food, and otherwise.
I couldn't help but picture in my mind the image that David Morgan talks about when he talks about the gold-silver ratio getting too far out of whack. He says he always loads up his pickup truck with silver and takes it to the coin shop and changes it for a glove compartment full of gold. Or when the ratio gets the other way, he'll take his glove compartment full of gold and go to the coin shop and come home with a pickup truck full of silver. So when you talk about too much of a good thing, I always picture this pickup truck full of silver. So, yeah. Thank you, Rob Kirby, as always, for joining us here again on Reluctant Preppers.
My pleasure, Dunnigan.